Welcome to another episode of Wolf Street. For those of you that don't know, my name is Wolf. And for those of you that do, thanks again for checking me out. I just wanted to take a minute and give you a little bit of a midweek update and go over some of the topics that I covered on my last episode. For those of you that don't know, this is a podcast that also has a YouTube version. So if you're just listening to the podcast and you want a uh, visual version, I highly recommend that you check it out on my YouTube channel. That is at Every Time I Cash, just like it is on the podcast channel. You can also check me out on social media at Every Time I Cash or on my website, everytimeIcash.com/contact. Feel free to reach out to me directly on all social media platforms. Once again, at Every Time I Cash. Um, I wanted to cover some of the topics that I went over on Sunday, and I want to start first and foremost with this coronavirus situation. So on Sunday, I stated that we've had 60,000 cases pretty much a day. That the outlook moving forward is a little bit bleak, and part of the reasons for that are that going into the virus, that the Fed created a backstop by basically building a money bridge. Basically, what the Fed did is they said, "Okay, here's a bunch of money. We're going to throw all this money at this problem. Hopefully, the money that we throw at this problem will last the length of the problem. And as long as we can get to the other side of this problem, we can just kind of ignore it. Doesn't matter how deep the hole gets, as long as the hole that is created is a short one. So basically, you can have a, you know, million-foot hole as long as it's not too wide. We can get across it with the money that we throw at this. So that was situation one. Situation two is individuals were getting compensated. So you have that $600 a week Corona subsidy, and that has been extended. I don't know how long that's going to last, and it's your guess as good as mine, but as long as it does last, it can create a little bit of a buffer and we can kind of get through some of these problems. The second issue is, or the third issue, excuse me, is that um, corporations were given these loans for keeping their staff employed. Uh, I heard in an interview today, Tillman Fertitta specifically telling CNBC that his businesses are operating at a 54% loss. So you can't operate at a 54% loss. That is a deficit of all deficits, and you'll be out of business real quick. So a lot of these business owners and these businesses in general are faced with the dilemma that they've already honored what they needed to do in order to um, satisfy their lack of repaying some of these loans. So they've already gotten through whatever it is that is required from the government in order for these loans to be forgiven. So now, if we can't get the economy back on track, you're going to start seeing layoffs. You're going to start seeing a lot of these businesses basically say, "Hey, I can't operate my business at these current levels and at this current rate, so I need to um, get rid of some of the employers, or I need to cut costs, so on and so forth." You already started to see that in a lot of corporations. So, like Wells Fargo and United Airlines are two that I can think of off the top of my head. So, those are some of the issues on corporate side. So, and on the consumer side. So, if I have had a, let's say, a 3 month situation or a 4 month situation where I'm not getting paid like I used to. Maybe I've exercised my forbearance on repaying back loans. Maybe I've exercised forbearance on repaying back my mortgage. A third of Americans, I think, as of last month, according to CNBC, skipped their mortgage payments. And I heard some of the people that are optimistic about this say, well, they basically are saving cash for when they need to actually pay it. Well, the problem is when you have to start paying things back, you're not just going to have to pay um, that month's bill. You're going to have to repay some of the things that you haven't paid. and that actually kind of compresses consumer spending. So it's very important to remember this moving forward. It's very important to distinguish between the consumer's desire to spend money and to take on debt and their um, rationale for taking on money or taking on debt. So don't confuse the consumer's willingness to spend for whether or not they actually should be spending or whether or not they can be spending. This was a thing that I saw in 2007 when the markets were on fire, basically the housing bubble. People were buying houses left and right. No one could really afford the houses. No one gave a shit that you could afford the houses. And then people were taking on second and third mortgages, and they were taking on refinancing to fix the home. So all the data looked good and everything looked great. So we're seeing some of this now, not in a bubble sense, like not in a sense that people are, loading up on houses, but you are seeing people take advantage of low interest rates to fix up their homes and do some things. And you are seeing some people kind of take the money that they are being given and spend it on some stuff that they may or may not spend it on, or should or should not spend it on, excuse me. Um, so as the longer that this problem persists, the longer that this can remain an overhang. Now that said, we did have that mRNA news today, and mRNA antibody testing. I'm not sure of the total specifics. I do know that there were 45 participants in the study, and that all 45 participants developed antibody to the virus. So that is um, a positive thing. It is only 45 people, so let's just keep that in mind. But it is a very positive thing because just like the Fed created a backstop monetarily, a vaccine creates a backstop for the consumer consciously. So if we just have a vaccine, the reason that a vaccine is important is because the assumption that if we have a vaccine, then people can kind of relax and be a little bit more business as usual. And this is particularly important for people who are high risk. So it is important to kind of understand the why of the vaccine, and to understand what it is that I want to think about moving forward when it comes to a vaccine. Um, the second thing that I want to know about the vaccine, or the second item that I want to flag, is how long does the vaccine last, right? So is this going to be a thing where individuals take the vaccine and they can get it done yearly? Is it a thing that has to be like every couple of weeks? Like, how long does it last? So these are very important details. We're going to go into another phase of testing with this vaccine, excuse me, and I think from memory here, I didn't get a chance to read thoroughly, but I think the next test is going to have upwards of 30,000 participants, so you're going to get a little bit more clear indication. You're going to get a little more clearer of data. But this is a report that I understand actually had data points for the first time, so this is a solid thing. It's a good thing. I'm not undermining its importance or its prowess, but I did want to just kind of come into it with a level head and just kind of say, hey, here are the things that I want to look for. Here's how I want to think about it. Here are the things that I want to see moving forward. So, of course, um, if I can just relate that to the stock market, you have the S&P 500 has been oscillating between 3230, give or take, and it's 3000 or 2950 level. So this is particularly important because it hasn't broken any of its moving averages to the downside, outside of the 20 and 5 day. So all of the structural support that exists in the market, so the 250 and 100 day, are still in place and are still intact. This does potentially set up for more upside if the news flow can continue to remain positive. If the news flow can go negative on the back of coronavirus or otherwise, then this is something that you want to keep in mind. So, as long as we keep holding this 200, 150 day moving averages, and if it breaks one, just check the other one. If it breaks the other one, check the third one. As long as we hold this support and we end up closing above, then this is something that can remain constructive going into earnings season, which we're picking up. The important thing to note, though, is that volume has been pretty much non-existent for the last 2 weeks. That's in part because the holidays. So we did have the July 4th, and we had last week. A lot of times, professionals and traders continue to take the following week off after July 4th, and in part because we have earnings season coming up. So this is something to note. We could get the violent move once we start getting more company data. We had banks today, and basically the bank data was pretty anemic. It didn't look too great. I don't like some of the things that I personally read and some of the things that I saw. But if the market wants to create optimistic pricing based on vaccine data, then that's a totally different story. The other thing that you want to remember and you want to keep in your head is that we have, and I touched on this a little bit on Sunday, we have the China trade fiasco still lingering in the market. So on Sunday, I stated that the um, China trade debacle was an issue for us. And on your screen, you're going to see the Dow Jones industrial average. So for the United States, the trade deal has actually worked as a dampening effect. And what I mean is, we've taken one step forward, two steps back, headline to headline, and the US itself is not really seeing any positive benefits on the back of this trade deal. And on the back of this trade negotiation, on the back of this trade nightmare, honestly, because there's really no deal. To say that you had a phase one deal was just, a little bit of a show, a little bit of a playing to a base. I don't know, but it doesn't seem like we have any structural material thing that's taken place. We've been oscillating back and forth. We've gone nowhere basically for 2 years. As you can see on your screen, we're right back where we were in February of 2018. So we've gone literally nowhere for 2 years on the Dow. This doesn't mean that we can't necessarily do so, go, doesn't mean that we can't necessarily go anywhere moving forward, but for 2 years we've gone nowhere. um, and this comes to this I want to point out on the back of Trump having his press conference today at 5 p.m., where he basically started to verbally lash out at China once again. He did sign into executive order that they are going to um, list Hong Kong as basically a mainland China beneficiary. It's not going to be an instance where Hong Kong is treated like it's its own independent entity. I don't know, like, what's going to come out of this from China. I do believe that some of the things that are taking place currently with respect to China are going to be retaliated against. And with that said, I want to point out that U.S. money year to date on aggregate has been flowing out of Chinese stocks and out of Chinese funds to the tune of 7%, while Chinese stocks and Chinese assets have been making relative and absolute highs. So, this is something that you want to keep in the back of your mind as well. How are things going to progress moving forward from a Chinese standpoint? How are things going to progress moving forward from a relationship standpoint? If you get an instance where China decides to retaliate, how are they going to retaliate? Is this going to escalate? Is it going to be an instance where a cold war, excuse me, turns into a hot war? So these are things that I want to keep in the back of my mind. There is a thing that I want to highlight specifically about this, and that is, on the face of it, like, wanting Chinese companies to actually to actually be audited the same way US companies are audited before they take hold in American markets is a positive thing. Like, this is a thing that should actually happen because it benefits investors, it benefits the companies, and it benefits all parties involved. Like, financial transparency is a very positive thing for investors. Now, that said, China's always operated under the guys that this is a national security aspect and that they aren't allowing the United States to actually audit these companies. Now, there is an a little bit of a gray area here where the rhetoric behind what's taking place on behalf of the United States is that um, Chinese financials are or investing in Chinese financials actually benefits the Chinese party, and therefore it benefits Chinese military, which creates a system of national defense. Um, and if that gray area is treated like investing in all Chinese companies or in all Chinese financials or in all money funds or in all money flows in and out of China represents some sort of national security risk, then you could really start to see an acceleration in tensions between the two countries. And you could start to see some actual risk um, in the US markets in particular, as they're a little bit more sensitive to this than um, Chinese names as of late. So this is how I want to look at it. This is kind of how I want to pay attention to it. I also want to pay attention to the dollar. The dollar's been weak, and I want to see if this continues or if you do get to see some sort of shoring up in this financial asset. So these are some of the thoughts that I have. These are some of the things that I want to pay attention to. I want to make sure that the tensions remain on a simmer and they don't actually boil, and that there isn't a situation where um, it's a broad enough statement and it's a blanket statement to where all companies doing business in China start to become susceptible to headline risk. So that is where I want to start. That is the logic behind how it is that I'm looking at things. I'm not here to tell you that I'm like the end all be all. There are people that are way more well versed than I am in a lot of this stuff. I'm not a doctor, I'm not a medical professional, so I'm not going to give you my 2 cents on whether or not mRNA's uh, vaccine studies actually great or not. It seems to be good, and from the limited knowledge that I have, and the market's receiving it well. And then I'm not a foreign policy liaison or some expert on China, so I'm not going to give you any of that. But I will give it to you from the perspective of the market. So currently in the Dow today, the Dow outperformed. We're right back to levels we haven't seen since yesterday. So we tested this 20 and 5 day confluence, and we shot right back up to this level that we saw in early 2018, which has been like a pivotal line in the sand multiple times along the last couple of years. So we saw the Dow lead, and ironically, we saw that as it came on the back of a lot of the industrials. So XLI is your industrial um, ETF. It was one of the outperformers today. It was one of the names that I was paying attention to. I didn't trade it. I didn't really do much today, but that was one of the names. It held its 50-day a couple times and is potentially setting up for a test of this 200-day if it can get some sort of momentum behind it. One of the names in it is Caterpillar. As you can see, you had a downtrend, you had a triangle, whatever you want to call it. You had a resolution yesterday. Today we opened on a gap down. It tested right back to where it took off from yesterday, basically, and was up and away the rest of the day. I fucked this one up. I didn't trade it. I should have. I didn't. Deer was another one. You're pressing up against a downtrend. You're pressing up against highs that it set in early June. And if you can get some sort of continuation above this 170 level, you should see some sort of test at the 178 range. GWW is another one that I saw. Once again, held 50, held 100, got a little bit of a cup and handle here. If it can break above this 330 level, sets up for a retest of this what is it, 347, give or take. You can say 350 range, 347, give or take. This 347 level was the breakdown point in mid-October. So it's another one. Outside of that, I saw truckers. starting to act nicely. I saw the other one, PACCAR, starting to act nicely, starting to set up the same way that these industrials were setting up. I saw that the XLE names were acting a little bit nicely. I personally am not good at trading these things. I hate trading these things, but I saw them performing. So XOM started to break out of this downtrend. CVX, similar thing. There's a downtrend here. If I draw it out, let me draw it out for you. Started to break out, tested right up against this 20-day. If it can get above the 20-day and hold, I'm looking to see 50 and then 100 get tested. And I can just go through the list like BP performed, FANG performed right up against this downtrend, PXD performed. Um, Pretty much you can go to USO even, which I don't really follow. So, oil names were performing today. Industrials were performing today. I like to call these stocks grandpa stocks. So basically, stocks that your grandpa would have traded when he was in his prime. So grandpa stocks were performing. Um, Outside of this, and if you can keep this in your mind and remember that the XLI and that the oil stocks are performing and that you have positive vaccine news, you can start to think of things from a perspective of, well, what could perform moving forward? So we know that um, if you watched my video on Sunday, we know that FANG has been on fire and tech has been on fire in general, and that has been a flight to safety. So, just to give you a little perspective, if you didn't watch the video or didn't listen to the podcast on Sunday, Apple and Amazon added $220 billion last week in market cap. So, put into context, I don't think that there's more than 15% of all companies in the S&P 500 that are worth $220 billion. And I think that number is even smaller. I think it's 5%, just kind of going off the top of my head. But it is safe to say that these things have been performing as flights to safety and flights to quality. Um, and uh, there is a potential that these names start to now see a little bit of a ringing the register ahead of their earnings report and start to see a little bit of rotation into some of the beaten up names. So the um, the stat that I can give you, I looked it up here, is that the top three companies in the S&P 500 are worth $4.58 trillion dollars. That's 15%, excuse me, that's 17% of the S&P 500, and the bottom 300 stocks are worth 4.9 trillion, and that's 15% of the S&P 500. Secondarily, the top 5 in the S&P 500 have a market cap of 6.25 trillion. That's about 23% of the market. Bottom 350 have a market cap of 5.74 trillion, and that's about 21% of the overall market. And then you can pull it out even further. The top 15 are worth the same as the bottom 420. So essentially, the last couple of months, we've been dragging higher from just a handful of names. You can say 15 names if you want, but we've essentially gotten most of our legwork being done by the same group of stocks and the same group of names that are basically the same stocks people have been trading for the last 7 years. So I bring this up because if we start to see more and more vaccine news, and we start to see more and more um, return to normal, you could see a little bit of snapback from the beaten up names, the dash for trash, the grandpa names, etc. So one of the names that I want to highlight is Boeing. Boeing is one that I've been watching for a very long time. I've tried it a couple times. It's burned me a couple times. I've done well on it a couple times, but it is pressing up against the downtrend of this little triangle. It's pressing up against the 20-day. It is a name that could benefit from this COVID vaccine input. If you don't see a sell off on the back of this COVID Moderna news, this is a name that could potentially benefit as airlines benefit in general. So I'm seeing on the hourly, you're starting to see the hourly is starting to act really constructive here. It's pressing up against this downtrend. If it breaks out above this 182 level, give or take, you can even pull it up to say if it breaks out above 183, which is the 20-day give or take, it sets itself up for this 187 breakdown level from a few months ago. So here's your 187 breakdown level. And then if you can get above that, I'm looking to target this 100-day at 191, I believe, give or take. And then if it can get above that, then kind of sky's the limit, can go all the way to 200 days. So this is one that I want to keep on my radar because I'm not good at trading shit stocks like um, United Airlines and American Airlines and Love and things like that. Another one that I like is Win. Win broke out of its downtrend. It's holding the 5-day. It held the 20-day as well. The 50-day is a little bit of resistance, and has the 100-day. But if it can give you a little bit of a little bit of consolidation, so if we can get another inside day, I don't think that we will on the back of this headline, but if we did, then that can create some sort of upside potential. Another one that I like is Pen. Pen is in this little triangle, a little cup and handle on the daily. If we can break out of this triangle, we got 31 is final resistance. Break above this level, we can set ourselves up for a potential retest of this $40 level. Another one that you can think about is DraftKings. So DraftKings has been this slow and steady downtrend. It's still in a flat. Oh, excuse me, still in a flag. Um, Came close to testing its 100-day. If it can kind of go sideways here and then break out of this downtrend, it really sets itself up for potential acceleration, especially on the back of sports coming back. Um, Lulu is another one that I like. I highlighted this one on Sunday as well. You got your 50-day kind of creeping up. 20-day and 5-day have been acting as support. It didn't act as support today. The 5-day, that is, if it can hold, sets itself up for upside 325 as your upside. Nike is another one that I brought up. Nike again getting tighter. 50 days still acting as support. Below that, you have your 100, 200-day breakout, probably tests prior highs. So these are some of the names. Let me see if I can think of anything else. Oh, um, on the back of the Moderna on the back of the Moderna headline, I like IBB. I'm still long the IBB. The IBB is one that I really like moving forward. I especially like it because you got 5 years. What is that up there? Let me delete this. You have 5 years of consolidation and you just started to break out. So there is a potential that this thing can go back and fill. If it does that, I'm not too worried unless there's like real structural damage to the market. But this is a way that I'm looking at it, and this is a sector that I like. I especially like it considering how far and fast some of the FANG and tech names have moved. This is a little bit of value, a little bit of tech, a little bit of growth. This is a sector that could potentially benefit from all things vaccinations and then all things flight to safety, flight to quality. If you like a little more torque, the XBI is one that broke out recently as well. This one broke out of a 2-year range though. Um, this one typically has a little bit more bang for your buck, and has names that have a little bit more bang for your buck. So you got this 100 level. Let me zoom out so you can see it. You have this 100 level as support. You've got your 20-day at 110, give or take, 50-day at 106. And then by the time it would get there, you'd have 100 days sitting at about this $100 level, which 100 on 100, buy it both hands from me. So these are some of the sectors. I also like Regeneron. Regeneron broke out again, broke out of this 5-year range. If this thing can cooperate. Broke out of a five-year range. This 5-year range is identified by this blue line. You can call it that 600 level. It's in this uptrend. The uptrend kind of coincides with the 50-day. If it can hold the 50-day and if it can break out of this range, potentially sets up for more upside. INO is another one. 26 acted as resistance and acted as this little inflection point. Got above that today. 5 days acting as support. If you get another consolidation day and then a break above, call it 28, it could test for potential new highs or the prior high. Um, Another one is NVAX. NVAX kind of trades in sympathy with COVID names, and NVAX is kind of consolidating right at prior highs. Again, these are COVID names. These are like headline related names. Um, they typically trade in tandem. They typically trade on the back of one another. So outside of that, another way to look at it from the um, reopening standpoint is things like Disney, right? So Disney broke out of this downtrend. It's been consolidating and holding its prior highs, or not, excuse me, its moving averages. It's been holding the 50-day especially well. And if it could create some sort of follow through, it should press up to about 125, which is its 200-day. This could be one that starts to get a little bit more accelerative growth as basketball starts to pick back up. I'm not sure, but this is another way that I look at it. Then you have your basically junk retail names. JWN provides a really well defined level here. Below this $15 level, I'm looking at about 1450. If that breaks, I'm looking at about 14. That breaks, look out to about 13. But if this $15 give or take level can hold and it can break above this 16 level, it could start to shoot back up. I'm not good at these names. I like names that are up and to the right. So I like to find winners within certain sectors. One that I've identified on Sunday and that I think closed at an all time high, closing high that is today, is Restoration Hardware. It's really setting up for potential breakout and potential follow through. Another one is DPZ. DPZ has earnings, so it's going to have a little bit of a catalyst. But this is a name that I'm going to monitor moving forward. CMG is another one, acting really constructive, acting very well, respecting its 20-day. If it violates that, I'm looking for the 50-day to hold. Which, if that holds, I'm looking to see it potentially create new highs. So I like names, like I said, that move up and to the right. PZZA, Papa John's Pizza, it's another one, really constructive. So these are the kinds of names that I'm looking at moving forward on the back of the Moderna catalyst. So outside of these, um, I call them uh, real economy stocks. So things that you can pick up. The inverse you can potentially think of as true. So if you pull up Zoom, Zoom did eventually hold its 20-day and did have a tail that it formed. So it did create a little bit of a doji here. But if it fails again, I'm looking at the prior high, which was 225, and then the 50-day to hold. And if that doesn't hold, then I look at the 100-day, and I just draw out my levels and I think of it that way. Another one is Teladoc. Teladoc held its prior high today, which coincided with its 20-day. So if it gaps down tomorrow and it holds its 20-day and prior high, I think of it from a perspective of, okay, well, this one can potentially resume higher, and I at least have something to trade off of. If the the real economy stocks, as I like to call them, start to have more upside, then I'm looking to see how these you know digital 2.0 stocks start to behave. So Peloton is a beneficiary of the lockdown. It's a beneficiary of everything that's taken fold the last several months. As we start to get more and more positive information, more and more positive data on the coronavirus front, on the vaccine front, this is one that could potentially get sold off, especially especially since it's um, pretty expensive. It is a little bit cult like though, so I don't want to get uh, too aggressive with it, but I'm just kind of giving you how I'm thinking. So outside of that, like I said, we have the China front. I illustrated on Sunday that I wanted to see a retest and a hold of this 230 level, and as long as the 20-day can hold and the 50-day can hold, Baba is in this megaphone formation that could potentially see 300 by the time earnings roll around. So this is something that I am watching. It broke below its 5-day, but it got bought pretty aggressively once it filled this gap. So below this gap, I'm looking for a fill back down to just about 230. Another name that I highlighted over the weekend, Amgen. Amgen, I wanted to see prior high get tested and 20-day get tested. You saw that happen today. You saw it get bought right back up. So same concept here with BABA. If I can see some sort of action like I saw in Amgen, really sets up pretty nicely. JD is another one. JD, if it can get down to this 50-day, which coincides with a prior high, this is a place that you could see some sort of buyer step in. NetEase is another one. Once again, uh, if it could trade down to this 440 level, coincides with the 20-day. If it can hold there, should see some buyers step in. It also coincides with this uptrend. On the back of the COVID reopening, if things start to look good for um, reopening, things start to look good for travel. I like travel stocks like Expedia, and I like travel stocks like TripAdvisor. The reason I like these is because they are predominantly rooted in tech. TripAdvisor I don't like so much as I like Expedia, but Expedia holding its 50-day, holding an uptrend. If it can resolve out of this triangle, I want to look to see if it can test this um, 200-day or prior breakdown level. Outside of that, you have Uber, you have Lyft. These are stocks that also kind of trade in unison with this reopening and with things getting better. So I monitor those. I don't really trade those personally, but I'm just kind of giving you a little bit of logic of how I think. For me, like I said, it's Boeing. If Boeing can show a little bit of strength, that's the one I'm going to look to potentially follow up on. And on the back of China, I'm looking at Baba, I'm looking at JD, I'm looking at NetEase, looking at um, Momo was another one. Tuyu, excuse me. Um, so these are the types of names that I'm looking at on the back of some of these headlines. If things get better on a trade front, like it will also benefit these industrials, these agri stocks, and um, some of these farming related names. So outside of that, some other themes that I noticed are oil names. Like I said, are picking up. So XOM, you could say BP once again, CVX, BP, FANG. So as you can see, you get like these really well defined downtrends. You get these really well defined levels to trade against. And if they could break out, then those are some of the places that I'd look. Lastly, I'd look at some of these metal names. For whatever reason, some of these names have been really outperforming. So I really want to pay attention and see how some of these names like Freeport McMoran, Alcoa, X. I want to really keep an eye on these and keep an eye on how these are performing. Uh, so that's some of the logic that I have. Materials in general are 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 where I'd look on that front. So you got like XL. If I can pull this up, you got like XLB. Um, if you can break out of this little downtrend and out of this resistance, you could test prior highs. So these are some of the thoughts that I have. These are some of the ways that I'm looking at things. These are some of the ways that I'd immediately look to see how I can trade some of the information that's moving forward. And on the last front, I want to pull up Nasdaq. Nasdaq opened above this channel that it's been in, sold right back off. Today came close to the 20-day, but it actually retested that prior channel top, held, and here we are right back to that 5-day, give or take. So there's a possibility that we grind a little higher, but I'm still looking at this channel that it's in, that it's riding in to act as resistance. If it fails here tomorrow, if it's like a sell the news event, look for today's lows to act as support. Below that, just below that, which I think tomorrow today's lows would act as 20-day support. That's where I'd look. Below that, look to this channel bottom. For whatever reason, we break out of this channel bottom. Look for the 50-day, which kind of coincides with the prior high. Let me highlight this with an arrow for you. It coincides with this prior high that we set back in February of this year. Let me pull this up. Some of the names, Netflix, I said on Sunday, just kind of traded like a mind of its own. 20 day again, I'm looking for support. They have earnings on tomorrow afternoon. So I'm looking to see how that plays out. So there's that aspect. Another sector that I didn't cover. Sorry, it's a lot. I'm just kind of doing it a stream of consciousness. But another sector is the XLV, acting really constructive, a little bit of quality, a little bit of defensive, but with a little aggression there. One of the names I highlighted was J&J. J&J has earnings this week. I was looking to see if it would break out ahead. It did. Um, J&J is one of those names that I've never traded on earnings and had follow through on. I usually see it sell off, get bought back, and then take off. Some of the other names have been Home Depot, which is making new highs, Lowe's, which is making new highs. So these are some of the places that I'm looking, some of the ways that I'm thinking, and some of the uh, logic that I'm applying here moving forward. Hopefully, you found this helpful. Let's go over just a couple more favorites before I close out. But Apple, you have this resistance trend to the penny yesterday, sold right off, bought back at the 5 day. You have Google, uh, prior support held for now. Below that, I'm looking 20, then 50. Um, this is pretty nasty action from Google. Google's one of those names that, again, I don't trade, I own. But I did go over on Sunday that not all of the FANG names are the same. Google's one of those that could potentially outperform while the other ones take a breather. Microsoft is another one, held the 20-day and breakout point today. I want to see how that one performs moving forward. Tesla is all momentum, it's all technical, had a blow off yesterday. The 5 day held today, and the prior breakout point from Friday held today. So if you can get a sell off below that point, I'm going to look to see 1350, hold as support. Below that, I'm going to look to see 1280, 1300 first, but below that, 1280, then a gap to fill. And if it could fill that gap, you'll probably be at the 20-day. If you break that down, then look for this second gap fill here, which puts it at about 1100. Tesla is one of those names, like I said, if you feel like you've missed out on with premium where it is, personally, how I look to potentially own a name like Tesla. This is not a recommendation. This is not like me telling you what to do, but I personally, given that you saw a breakout to new highs, retest of the breakout point, and then um, a test of the 200-day, I would look to see a potential retest down to the 200-day, and then I'd look to be a buyer of the 200-day. So if I am looking for a potential place to get in to Tesla, I would look to potentially sell premium at this 600 strike so that I could own it at around $600 if it ever got there. That's just one way I'd look at it. If I was more aggressive, I'd look at the $1,000 level, $980 level. But that's just how I look at it. This is, again, not me telling, this is not a recommendation. It's not like advice, not any of that. It's just telling you how I look at things from a logical standpoint. So I'm going to leave you with the NASDAQ. Again, here's your channel. The Russell, if things start to be a little bit more domestic driven, look for the 200-day to act as resistance. If it breaks out above that, look for potential retest of the prior highs that it set back in early June at around 1550. That also coincides with a breakdown point from late February. So this is heavy regional banks, heavy oil, things like that. So if you start to see um, rotation into those kinds of names, a little bit cyclical aspect to it, I'd look to see how the Russell behaves and how the Dow Jones behaves. So let me pull that up in a second. But the S&P once again, 3230 resistance. If we can break above that, hold, we really set ourselves up to potentially test prior highs. And if we can't break out there, then we set ourselves up for some other catalyst that could come of it. So the Dow Jones right back to January 2018, um, and if we can break out of this, we set ourselves up to retest highs that we set in in early June, and see where it goes from there. Last but not least, and this is for all of you crypto nerds, um, Bitcoin is really starting to act constructively. So this is something that I'm watching and monitoring. It's getting really tight. I don't know if something breaks it out anytime soon, but if it does break out, get a little bit of upside to 10,400. So hopefully this was helpful. Hopefully this logic was helpful. Hopefully this is something that give you a little bit of insight of how I think of things and how I'm thinking of things midweek. If you have any questions, comments, concerns, at me at every time I cash on all social media platforms, or you can just leave a comment below in the comment section here. Um, if you like this podcast, like this video, please leave a comment below letting me know. Please share it. Please like it. Please don't forget to subscribe. I'm trying out different forms of content delivery. I'm trying out different forms of giving you my logic. So hopefully this is something that is beneficial. And your feedback below and your feedback and your support really give me an idea of what works and what doesn't. If you don't like it, please leave a comment below and let me know what you don't like. That's fine too. There's all feedback is good feedback. So if I'm not doing something correctly, let me know. If there's things that you want to see done, or if there's things that you want covered, let me know. Um, like, comment, subscribe, share if you like it. If you want to reach out to me privately, at every time I cash on social media, everytimeIcash.com/contact. And so I'm just going to leave it there, and we'll see what happens moving forward. So until next time, please stay safe, stay profitable, and as always, stay locked in.